Welcome to Classic Value Investors. My name is Mariusz Konieczny, and today we're talking about oil tankers. Well, it's been a week or two since I did a video on oil tankers, and as you know, the industry so much changes in 2 weeks. We might as well do another update. But before we do this, I wanted you to make sure that you saw this following disclaimer. And this disclaimer is going to occur on every video or something like that. And so thank you, Tyler, for bringing this up to my attention in the previous comment. So some of you that come to listen to this channel are experienced investors. You know the risks, you know what's going on, you know, you're not worried about some of the things that I'm talking about. But the problem is that obviously some of the people that come to this channel are new, and I don't know who the newbies are. So this is pretty much to protect themselves from themselves. And you see, the problem with the investment industry is that the investment industry hates the kind of stocks that I'm talking about. In other words, microcap stocks, illiquid stocks, junior mining sector, because they are, illiquid, meaning not a lot of shares trade. So it's very hard to get out when you want without losing a lot of money. They are small, so they are not like Coca-Cola or Berkshire Hathaway of the world. They might have one business segment, one product, or they might not even have a core business. In case of Oracle, which it's an asset play, so that makes it risky. And if you are inexperienced and new investor, such opportunities can make you lose a lot of money, because if you're wrong, you can lose a lot of money. And if you hear that something has, a huge potential, like Tyler said in the comment, you might put all of your savings into something like that, lose all your money, and, blame someone else for your misfortune. So everything that I talk about in this channel, I want you to consider extremely risky, illiquid, and do not ever put more money into any of these that you cannot lose, no matter how huge the upside is or how excited other people are I get about an investment opportunity. Okay, now that we have this out of the way, let's get to the oil tankers. When I did my video on Mr. Market, I talked about how about 2 weeks ago, Mr. Market got completely depressed. He looked like a homeless person. He could barely stand up on his own feet. And now Mr. Market doesn't seem as depressed as he was before. He's not super optimistic, but he's not depressed the way he was just, a few weeks ago or a couple weeks ago. So what I'm hearing right now, or what I've been hearing during this huge, depression in the mood, was that people were telling me the rates were going to go down lower, therefore the stock prices were going to go down even further. But they were interested. People were interested in getting back into the sector, but they thought there was more downside. So when you had all these people thinking the same thing, I thought to myself, probably the downside has been reached. And looking back a couple weeks, it appears so. We don't know if it's going to go even lower, but it appears so that maybe the bottom has been reached. Time will tell. So you might be thinking, okay, if you were looking at the rates and you were thinking that the rates were going to go even lower, and you were thinking that the stock price were going to go even lower, I always ask myself, in order to sell more, in order for these stocks to go down even more, and if you're the seller, if you want to sell more shares, you have to have more shares, right? At some point, these things get sold off so hard that anyone that's left simply has no interest in sell anymore. Like, take me for example. It doesn't matter how low they go. I'm not a seller. No matter what, I'm not a seller. And at some point, you reach levels like this where the holders just don't want to sell. And the only way transactions get done if the price is actually higher. Now we're getting to the stage where people are seeing the rates pick up a little bit, and they are starting to feel more optimistic. They want to get in, but they're afraid. They're kind of like they want to get in the water, but then they come out. So it's just this they're very fearful. They want to get in, but they're very fearful to get in. And yesterday was a perfect example where the rates were screaming higher. They got in, and they quickly got out because of what other people thought about the rates. And interesting thing, because when it comes to the oil tanker stocks or any stocks, you have hedge funds, you have investors that should think like business owners, because intelligent investing is business investing, but they're mostly traders. So they have one kind of mindset, and then you have the business people, the people running these companies, that think completely differently. And here's what I mean. Hafnia made an offer to merge/acquire Ardmore, and they offered Ardmore 70% premium to what Ardmore was trading for, and Ardmore refused because the offer was not high enough. So think about this for a second. Ardmore is trading at a particular level. A business person comes in and offers 70% premium, and it gets rejected. Yet hedge funds or investors have no problem selling it at this level because they're not business people. They're just looking at charts. They're looking at each other. But in the business world, we can see that these companies are trading way lower than they should. So I suspect that Hafnia might come back and offer more for Ardmore, and maybe 100, maybe 150% premium. Who knows? But they obviously have to offer more for Ardmore to accept that. And I wouldn't be surprised if there's others like Frontline or other big companies that may have a higher valuation in relation to net asset value, and they are looking at other smaller players who are trading at 30% maybe of net asset value, and something like Frontline could obviously acquire them and create value for itself, even though Frontline on its own is undervalued, but the company that they might be looking at is undervalued even more. So we'll just have to see how this plays out. Also, one of the analysts at Cleaves upgraded the sector, and he sees 240% upside through 2024. So think about this. From the current levels, you can, according to this analyst, if you invest in the oil tanker stocks at this level, you can more than double your money, right? That's pretty good. But he sees upside through 2024, but he doesn't like it in the short term. So now the question that actually I have to you, based on my observation, I don't know where you live in the world, what city you live in, but the last, couple of weeks or so, when I went on the road driving myself, I could not believe how many cars are on the road. I mean, usually in my city, it's a small city, we don't have that much traffic, but I was just absolutely blown away by how many cars are on the road. And I was thinking to myself, Everyone in this sector is talking about how we're not going to have this demand for oil come back. And yet there are so many cars on the road. And I'm reading some articles how some cities are worried about having too much congestion and too much pollution because people are not taking public transportation, yet the public transportation is still using up diesel, and we have all these people driving. I mean, more people are driving to work, but probably more people are just bored. They don't know what to do, and they're just driving around because they're crazy sitting at home. So I want to know your thoughts. Are you seeing the same thing in your city where you live? Because if that's the new trend, I think that people in the oil market are going to be surprised. I wouldn't be surprised if the demand actually blows through the pre-COVID levels because of the way we're behaving differently. So in conclusion, that's it for the oil tanker market. Let me know your thoughts below.